this is not a coincidence that the Fed keeps easing, causing inflation, printing money, and the price of gold goes up. Now, the question is, how much higher is this easing cycle going to send the price of gold? Because I think this one is going to be the big one. I think we've been building up, right, like a crescendo, and now we're going to have this huge rally because this is going to be the most inflationary bout of monetary policy that we've seen. It may even be bigger than COVID, but it's certainly going to go on for longer than COVID. COVID was like, a shot in the arm, quick, right? A quick burst of money printing and spending. But this could go on for a much longer period of time. And so I don't think we're just going to see gold going to 5,000 as a result of this easing cycle. I think it's going to go much higher than that. Hopefully, everybody else will enjoy listening to it as much as she enjoyed recording it. But anyway, again, so go to Spotify, listen to the song, and then share it with your friends. Anyway, so let me get back to today's podcast. I started talking about gold and the fact that gold hit a new record high pretty much every day this week. And it closed at a new closing high for a day, for a week. Gold closed, I believe the settlement price was $2,578, although that could change. I'm recording this about 5 o'clock East Coast time, so sometimes they end up changing the price a bit, but that was where it was the last that I looked. The high of the day, intraday, that I saw was 2,583, maybe a little bit above that. So that is the new all-time record high for the price of gold. Gold is now up 25% on the year. That's a big year, and the year's not even over yet. Now, let's contrast that to what's going on in the stock market, because a lot of people are talking about, stock market's really strong, and it has been strong if you measure it in dollars, U.S. paper currency. So the Dow was up 2.1% on the week. Now, if you just heard that, that's a good week. Dow was up 2.1%. Gold was up 3.2%. So that means in terms of gold, priced in gold, the Dow was down. Even the S&P, which rose 3.1% on the week. In gold terms, it was actually lower. My last podcast, I talked about the fact that 2,500 was probably the new floor, that we could go slightly below it. And I think the lowest we got, ever since we got above 2,500, the lowest we got was about 2,480. And here we are now $100 higher at 2,580, when gold had a 1% decline from its highs. It went from 2,530 to like 2,480. Gold stocks got clobbered. The GDXJ was down 15%. And so this week, it recouped all of those losses. But the indexes are still extremely cheap. And I still think that people should be buying these stocks as fast as they can come Monday morning, regardless of where they are. Obviously, you need to be a speculator. There's risk in these stocks. But as far as I'm concerned, they may as well be giving them away in Cracker Jack boxes. That's how cheap they are. Still going up. Silver almost back to $31, above $30 today, up, percentage-wise. It was a bigger move than gold. Silver stocks, of course, are still well below their 52-week highs, because even though gold made a new all-time high, silver didn't even make a new high from a few weeks ago or a month ago, wherever it hit that level. So silver is still the sleeper, and the silver stocks are very cheap. So over the weekend, you can go to Schiff Gold, as I've been saying. There's no reason to wait for a pullback, because you're not going to get any significant pullbacks. I think the risk is that you're waiting for gold and silver to come down, and instead they go way up. And the reason they may go way up next week is the Fed's rate cut. I've been saying for months now that I thought that they were going to cut 50 basis points. In fact, I thought they might have even done an emergency 50 basis point rate cut, but they didn't have to. The Bank of Japan helped out, plus the market started to discount a 50 basis point cut. In fact, the reason the markets were so weak last week, and the reason I titled that podcast that markets were on the brink of a collapse, was because the data that came out last week caused a lot of investors to think that we wouldn't get 50 basis points, that we're only going to get 25. And I think the market needs 50. In fact, they need more than 50. But the Fed needs to show the market that they're serious about cutting rates. And the markets don't want a mamby-pamby 25 basis point cut. They want 50, and they want to know that the Fed has got their back and that it's going to be doing more cuts. Now, this week, what happened is you had a lot of people coming out, even at the Fed, kind of indicating that 50 is still on the table and 50 wouldn't be unrealistic. In fact, a lot of people have come out, big people on Wall Street are now supporting and they're behind this 50 basis point rate cut. And so I think that the Fed is going to deliver exactly what the market expects. In fact, if they don't get 50 now, if they end up with 25, we could get a big drop. In fact, one of the things that I was concerned about last Friday was the dollar breaking down against the yen. I thought it might break down below 142, and it did. Not only did it break below 142, it closed the week below 141. The dollar yen closed at 140.9. This is the lowest the dollar has been against the yen all year. And the dollar index also was down about 1% on the week. It still hasn't collapsed. It's still above 101. The dollar is still weak, especially against the Swiss franc. It didn't crack 84 cents yet. I mean, that's going to be, I think, a key level. I think it closed around 84.9. We were lower, but dollar recovered a bit. But the dollar has been particularly weak against the Swiss franc. Remember, it's only about 7% above an all-time record low. But we got the weakness in the yen, but it didn't really cause any kind of significant selling in Japanese stocks. I mean, there was an initial maybe 2% drop on Sunday night, but the market kind of recovered. And so by the time we rolled around to our time zone, we were already on the recovery. And then we got all of this 50 basis point stuff that started to, rekindle the hopes that the Fed was going to do 50. And I think that is what caused the rally in the stock market, but it also caused the rally in gold. And this is something that's very significant too. We'll see where gold is, but gold's making record highs and the Fed is about to start cutting interest rates. That's never happened. I mean, if you look at the last couple of rate cutting cycles, the most recent one started in 2019, July 31st, 2019, when the Fed cut rates, and then of course they eventually went to zero with COVID. But that first rate cut, gold was at $1,412. That was the price of gold, right? Over $1,000 an ounce lower than it is now. But that was still 26% below the record high. The record high was 1920. So gold was way off its highs before the Fed started cutting. If you go back to the cycle before that, which was the September 18th, 2007 cut, that preceded the 2008 financial crisis, but that was the first cut. At that time, gold was at $726 an ounce. It was 15% below its record high from 1980. The Fed has never started a cutting cycle, at least in modern memory of these cuts, with gold at an all-time record high. And, it's not a coincidence. This is not a coincidence that the Fed keeps easing, causing inflation, printing money, and the price of gold goes up. Now, the question is, how much higher is this easing cycle going to send the price of gold? Because I think this one is going to be the big one.